Good morning, everyone. This is Bag of Don, Stock Market Caddy. It's March 30th at 10 a.m., and we wanted to give a glimpse of the overall markets and also to give folks a glimpse of how we approach the markets. We're very mechanical, very disciplined. We use the same systems day in, day out, all time frames, don't change it. We operate under the assumption that we are not the smartest guys in the room, that in fact we are the dumbest guys in the room, that we're not going to know whether there's war or not war. I mean, we can speculate all day long about various things, which is what they do on the Contrary News Bubble channel, but that's not how we make our bread and butter. How we make our bread and butter is writing our proprietary systems. This is our strategy called the Shark. This is a dynamic stop level 1, 2. We give you the weather, the slope rating, the wind direction, the fairway width, and we have individual clubs that we will hit, if you will, or strike the ball. To make money, we have multiple time frames: 60, 240 daily, weekly, or monthly. You basically choose the time frame in which you want to trade. The greater the time frame, the more significant the money that one could earn, but also the increased risk. If you choose a shorter time frame, you'll be a much more frequent trader. But the idea is that you're trying to manage or control risk. But let's take a look. The volatility index is basically a flat. So we're expecting a significant move one way or the other, probably this week. The S&P. Let's come down here and take a look at it. The S&P on the daily time frame, the 1 hour is just a very short glimpse, but the daily has gone flat. The weekly time frame is showing us, the weekly and the monthly, that we got a significant headwind. We have the hint of a stall, and we also have what we call high divergence. High divergence. Let me just bring this over so we can bring everything into view. So that is telling us that our proprietary systems are not confirming this high. We expect the market to roll down. The Russell is flat on all the shorter time frames right up into the daily. We've got the hint of a double top on the weekly time frame, a stall on the monthly, high divergence. The Nasdaq went from being the strongest to the weakest in just a matter of days, has gone to a short mode on the daily, and the same thing we have on the larger time frames. We're getting sell signals. And then the Dow, let me bring the Dow as the YM into view. These are the futures contracts, folks. Has moved to flat. It's been hanging right in there, but we still got headwinds and we got the hint of a stall. So we see the market doing just that, stalling out. Takes them about 90 days to roll out of a market. They're repositioning. This will be a very telling week. For those of you that want to see a chart, and again, this is a representation, everyone, of charts. On what you're seeing is actually 1, 2, 3, 4, 5 charts of the S&P on all of these time frames, running this strategy with all of this information here. It's really a remarkable tool. That this is unique to TradeStation, but the software that we've written, this is our intellectual property, if you will. So let's take a look at a chart. This is a weekly chart of the S&P. You've seen this from us for months. You've seen it, representations of it from virtually everybody. That's the dangerous part. Everyone has it. This is what we've been eyeing, is this time cycle that we drew really months ago. This is the point in time when this market will be very much on borrowed time. So what time is that? That is the week of April 26th. We don't even think it's going to get there. We think that it'll turn down in advance of that. Certainly anything after April 26th, this run will be exhausting itself both on price and on time. But that is the point. One thing about the central planners, boy, they really like to have these trains running on time. Okay, so we We don't see, everyone's talking about so much support. We don't see that much support here, and we think once we break this area, the real key area we think will be down to test that 172 for those of you who like to trade the SPYs, or 1720 here. If that gets taken out, we will come down in our view quickly to test out this area here and see if I can move this over here. Well, I don't want to move my trend line. Suffice it to say, I mean, we still got a ways to go, but we think that would be down. Well, this trend line here would be in the 1600 area. So good luck, folks. As far as all the noise this week, it's all noise to us. Again, we just assume that we are the dumbest guys in the room, and that the people who are in the know, the cronies, who have the big money, that they will make their moves and that we will see them. So good luck to everybody. Be careful. And we do think that this week could be a very pivotal turn. Usually when a market lets go, they don't let people in and they don't let them out. So this hanging at the tops up here seems unusual to us. Would not be the least bit surprised you wake up one morning or one night and the market's gapped away and on our way, but has yet to do it. So, and the VIX is still relatively calm for all of the world, the world issues. But we'll see. Good luck. Be careful. If this sort of approach, by the way, to the markets interests you, feel free to give us a call. We have subscribers. We have a mentoring program. We also write programs if you're on TradeStation. We can talk to you about developing your own strategies, back testing, forward testing. We're basically a mentor for traders. We're not a money manager. We're not a broker or a broker. We're not making specific recommendations about buying or selling anything. We're about sharing with you what we have learned, our approach to the market, how we go about writing strategies, and we have lease arrangements available, but we can help you develop your own. If you want to get to a place where you can turn off all the noise and just trade dispassionately, come in, make your money, and leave. Good luck. Be careful.